Hello everyone, good morning and thanks for joining us on this Saturday, and welcome to this educational presentation where I'll be offering you the chance to be one of the first to trade our new method. This is a brand new method. We haven't introduced a new method in years to our students and our members around the world, and we're excited to be introducing this new pullback method. For example, let me just share with you some of the recent setups that were generated using our new method. If we look at this chart here in the S&P 500 index, we see going back to the summer of this past year, July, that the market was steadily going higher. Now, this is the way most traders will trade. They'll do very well. Most trading methods and most systems do very well when you're going upwards in a market. They're designed to trade that way. But what happens when we go into this type of environment, as we have in the last couple of months, from October through the mid to the end of December? We've pretty much had a very negative market. Well, this new method I'm going to be introducing to you today actually generated signals while the market was going up at the beginning to the middle part of this year, and while the market was heading lower. Look at these sell signals that were generated. Now, these are signals that are generated on daily bars in an index. You could have applied options. You could have actually traded them with actually buying or selling short the stock or the ETF if you were interested. But this can also be applied to currency pairs, can also be applied to forex markets, to commodities, to Bitcoin, anything you think of trading, anywhere where there was a trend, an overall trend, and a pullback established. You can trade it in any time frame, in any direction. So what is this new method? Well, we call it strategy number 9, and I'm going to be introducing some of the highlights of this particular method, as well as show you some current examples as well. This is all going to be done using our new platform. This is the PTS Primo charting platform, the educational portal that actually teaches you how to trade in both up and down markets. We are continuously adding new things and updating it and adding new versions of our platform, and this is one of the newest things we've added, which is our new strategy number 9. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. 9 years ago, going on 10, starting in 2019, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate you as traders. It's our opinion, our philosophy is the reason why most traders fail, estimates upwards of 80 to even 85%, is because you take yourself out of the game. You don't make your own trading decisions, therefore you're relying on someone or something else to make your trading decisions for you. Now, this can be either in the form of a chat room or some trading guru or some master system, but everything basically tells you what to buy, what to sell, when to do it, what market, what time frame. And this goes entirely against our philosophy because we provide our members with techniques and methods and strategies, but they're basically basic formats for you to trade and just kind of spotlight these high probability environments for you to enter. Then we give you different options for entering, different options for exiting, different options for placing your stop, so that ultimately you're making your trading decisions, not us. So we give you a basic area in which to purchase or to sell, but ultimately how you make that decision is up to you. Now, I've been trading 41 years now, going on 42 starting next year. And if there's one thing I've learned, it's that no two traders should ever trade alike. I know this from personal experience because when I was first starting to trade some 41 years ago, I struggled tremendously. And I remember asking my mentors, can I just kind of copy what you guys are doing? Since you've been trading for 30, 40 years, can I just piggyback on your trades? And they said, no, because when we're not here after a while, or when the environment changes, you're not going to know what to do. So I didn't like this idea at first, but now I see that this is what has sustained me going on 4 decades now, because I learned how to make my own trading decisions. So if you look at how you trade, think of how you make a decision. Do you go to a chat room? Do you go to a trading room to find out what everyone likes or what this mentor is telling you what to buy or sell? Or do you have a signal service where they just blindly spit out orders for you to buy and sell and you just take them blindly? Or do you listen to some trading guru on TV who knows what the best stocks are or futures are and knows what you should be buying or selling? See, that's the way 99.9% of traders trade. Basically relying on someone or something else to make their decision for them. In fact, that's the way the whole business is structured. But if everything works so well, then why is it that 80 to 85% of traders fail? It's because you've taken yourself out of the game. You have to be a part of the process. So this is the gap that we fill at Specialist Trading and Pro Trader Strategies. We provide you with the information, with the tools, techniques, and strategies, as you'll see today, but basic formats so that you can ultimately make your own trading decision, and that's to trade it on your own. I'm going to show you a lot of examples using our new method today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you take a moment to view our disclaimer, please remember that all examples I'm about to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, once again, if you haven't done so already, I'd like to invite each and every one of you to follow us on Twitter. There's our handle right there, at SPCLSTTRADG. Might want to copy that down because I post a lot of great free educational information, anywhere from signals that our strategies have generated to spotlight high potential areas for purchase or for selling, or little bits of financial wisdom for you to soak in and kind of resonate and trust along the way. So lots of great free information. Feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are different from other webinars and other websites you may have attended in the past in that our only goal is to teach you. As you see here, my goal is not to force feed you signals. I'm going to share with you a great strategy we have that I've been using on my own for the past 6 months. But my goal is not to simply say, well, here's the signal for tonight, just take it. Don't worry about it. You don't know what it's based off of. You don't know why it's doing this. Just take it because, trust me, it'll work. Don't believe in that. That goes entirely against our philosophy. What I'm going to be sharing with you and what we do on our courses is that we share with you how to spot these high probability points for buying and selling. And you learn all of this in our courses. And then we give you different variables and ways in which to implement that trade, because ultimately you're going to decide how to do it. And people would say, well, Steve, why do I have to learn these different ways? Just tell me where to buy or sell. It's because, once again, no two traders should ever trade alike. Everyone's different. Some traders like to be in and out of trades in just a matter of days. They like a lot of action. They like a lot of trades. Whereas other traders like to stay in for the long haul. They want to be in weeks, months. Other traders have a lot of risk parameters. They don't mind. They just want to be in the trade, and they don't mind having a lot of risk, where other traders would say, no, I want as least risk as possible. So there are a lot of different ways to trade. You have to decide. So therefore, my goal is not to simply force feed you signals. My goal is to teach you how to trade with the specialist edge. It's the same edge that turned my trading around some 4 decades ago and has sustained me going on 4 decades now. Hopefully, it will be able to do the same for you. Now, since this is an educational presentation today, I want to take all your questions, but once again, I don't want to take all of your Saturday morning. I appreciate you taking time out of your weekend. So if you have a question, please wait till the very end, and I promise I'll answer them at the end. The only question that is going to be answered now is the most common, and that is this being recorded? Yes, it is. I record all the presentations, so if you have to leave early or if you can't see or hear the screen or hear my voice, don't worry, we will send you a link to this recording, okay? So once again, we have a good crowd here on this Saturday morning. Please wait to ask questions till the very end. All right, so let's begin. What we're going to be talking about today is a brand new method that I have been actually trading on my own for the past 3 months. I've actually been paper trading it for about 6 months, but 3 months ago I decided to actually start trading it as well. Now, this is strategy number 9. Let me tell you some of the highlights. It's an entirely new strategy, as I just said. No one has traded it. I've just recently, in the past week or two, shown some setups with some other people, but I really haven't explained the rules other than the people at Pro Trader Strategies who are putting together the course. It's pre-launch phase. In other words, we have not launched this yet, so it's entirely new. That's why we titled this presentation, How You Can Be One of the First to Actually Trade This New Method Along With Me. Now, it's designed to trade pullbacks. If you're not familiar with what pullbacks are, I'm going to share with you in just a few moments a couple of slides to just give you a brief refresher course. It only has 2 simple indicators. That's how simple this method is, okay? And I'm going to share with you what one of the indicators is today. Now, because of the 2 simple indicators that it uses, it actually only has 2 rules. Can you believe this? I mean, a strategy, a method with only 2 rules. That's what it requires to have a setup, to have some type of signal in place. And that's all you need. That's how simple it is. I remember I've said this before in presentations. A lot of times if you go to webinars or classes and you see people who have been trading a relatively short time, and by relatively short I mean 5 or 10 years, their methods are extremely complicated. Tons of indicators, lots of convoluted logic that you don't understand, based on a lot of requirements that need to be met. If you talk to the people that have been trading 30, 40, 50 years, most of their trading methods are extremely simple, maybe 3 to 5 rules tops, okay? And the reason is because that's what sustains you. It's the simple things that I've learned over my 4 decades that will sustain you, not the complicated ones. The reason why most traders fail is because they're overcomplicating your trading. Once you simplify it, and what my mentor said, get rid of all this useless noise, that's when you start to become consistent. So the good news is it's extremely simple method. The bad news is because it's so simple, I'm sorry, I really can't share with you the rules or go into even 1 or 2 of the rules because I will give it away. And that wouldn't be fair to people who already signed up to want to be some of the first to trade this. So I'll give you just one of the indicators today. But I really, in other past methods, I believe I talk about strategy number 4, one of our most popular methods. That's a continuation pattern recognition strategy. I will give 2, sometimes even 3 of those 5 rules in that strategy away during a free webinar. But I apologize, I can't do that today because if I give a couple of the rules away, well, you know the whole method. And that's how simple it is, okay? Now, the beauty of strategy number 9, once again, it can be applied to any market, any time frame, and any direction. Now, I'm going to mainly show you some ETFs and stocks today. That's where they're going to be the majority of the slides. But please remember that it can be applied to any market, any time frame, and any direction. So if you trade futures, which I have been trading it along on intraday future trading, it works just as well. Or if you trade monthly bars, or if you trade currency pairs, there are some really nice, equally nice setups in those markets in any time frame. Here's another advantage of this. Because it's a pullback strategy, what you're doing is you are looking for an overall trend. And then if the overall trend is up, you're looking to buy at a lower price. So you're purchasing it at lower prices. Because of the purchase at a lower price, there's much more room for it to go up if it's a successful trade. And because of that, it's okay to trade options. Other strategies we have are geared towards capturing quick momentum, and that may not always work the best while applying options. But this particular method, actually, we've seen that it does work well, even though I don't trade options. We've just seen that it can be applied because you are purchasing at a lower price and hoping for a nice move upward, which would help tremendously if you're just outright purchasing the calls or purchasing the puts. Now, with any strategy, no matter if it's one of our old ones or even this new one, we always ask our new members to paper trade. So if you decide to become a new member of this course, please always paper trade. Even though there are only 2 rules for the setup, trust me, if you don't follow them or you get too excited, you will probably implement them incorrectly and go on a losing streak and say, this doesn't work. This stuff, I just, wasted my time, energy, and money on this because it's not working. And then when I ask my students to email me results and show me snapshots, inevitably they're always implementing the rules incorrectly. So paper trade first so you can really fully understand the process behind this. Now, our edge at Specialist Trading and Pro Trader Strategies is consistency. Consistency, well, people have come to think that, well, that means that I will consistently make profits. That's not what consistency means. Consistency means that every once in a while you will experience losses. That's what consistency really is. You have to understand that you will have losses from time to time. But with a consistent method, you're usually able to recoup those losses very quickly. So that's what we're looking for. Okay? Don't ever let anyone tell you that, oh, this strategy or this system never loses, or we've had 1 loss in the last 2 years. I mean, that's silly. I lose all the time. I lost yesterday trading my first couple of trades and then made it back. That's what you're looking for because consistency will sustain you. A fly-by-night system that promises the world and maybe made 100 grand last year can just as easily and most likely will lose that in the following months. Trust me, I know many traders that hit home runs. I used to work on the floor of the stock exchange, and there were a lot of traders who made hundreds of thousands, if not millions of dollars in just a short amount of time, weeks. And not one of them is trading today because that master system, that home run system, gave it all back. They have no more money left to trade. Many of them are out of the business. So that is not the goal at Specialist Trading. What kind of a mentor would I be if I taught you some method that made you a ton of money and then lost it all and gave it all back? That's not what we're trying to do. We're trying to construct students that will be able to trade 30, 40, 50 years down the road. Remember, we're an educational company first. That's our only goal. So it's not educating you if we promise you the world and then have you lose it all in one trade. So consistency means a two-step forward, one-step back approach. All right, we talked about a pullback. All right, for those of you who aren't familiar, what you want to look for in a pullback buy scenario is for the overall trend to be going higher, as you see here with that green upward arrow. But as we all know, nothing goes straight up. You get into this phase, as we see here in the brackets, where you kind of pause and go into this back and forth type scenario. This bracket area is the pullback area. Now, where most people think when you reach the top of this trend and you start to curl over, that, well, that's it. The rally's over. We're probably going to come all the way down to the bottom. And sometimes that does happen, okay? But oftentimes, if you have the right requirements and the right methodology, this will just pull back to a certain level at this point in the brackets, and this is where you will want to buy. And you want to buy at these lower prices because in a great pullback scenario, the trend usually resumes back to the upward side and you start to make some really nice profits. This is what a pullback is, okay? That's why we say options are great for pullbacks, because you're buying at a lower price before the rally continues. Now, this can work on the sell side as well. As we see here in this pullback sell scenario, it starts with a nice trend in place to the downside, as we see with this red arrow. But then, as always, you hit this type of bracket formation where the sell-off stops and we start to bounce, okay? Now, a lot of people think, well, that's it. We've bottomed out. It's time to buy. And many times it is. Many times it is the bottom. But oftentimes it's not. It's just what we call a pullback up to some requirement. And if your strategy is in tune with detecting pullbacks, it will detect that we'll go up to a certain level, and that will be your pullback sell. And many times you'll see the market start to head lower, and that would be the perfect time to sell or to purchase options or to sell short. Now, if you're not really familiar, if you're not sure you've seen this before, think of the market. If you look at daily bars of the S&P index or many stocks, we have been going straight down for the past month, since the beginning of December, okay? The last 3 or 4 days, we've had a bounce. Is that the bottom of the market? I know a lot of people are saying, well, that's it. We've bottomed down, all right? Now, we're not a predictive company. We're not in any way predicting that, no, it's not bottoming out, that it's going to head lower. But we're waiting to see. According to our methodology, we're waiting to see if this is just a pullback or if we've bottomed out. But this is a scenario we're looking for, okay? Now, some more highlights about this method. Remember, it employs only 2 simple indicators. Guess what? I'll share one with you right now. We've talked about this before. It's the 50-period simple moving average, okay? This is what tells us what the overall trend is. So if price is above the 50, we're going to be a buyer because we know that the overall trend is up. So if price is above the 50, we're looking for a sell-off, and then we're looking for the next requirement to be met because most likely the rally will continue to the upside. Now, if price is below the 50, well, that's telling us that the overall trend is down. So if price is below, regardless of what time frame, regardless of what market, could be the Australian dollar, makes no difference. But if price is below, we're looking for a bounce. We're looking for a rally. And if it meets all the requirements, we're looking to sell on that rally when it gets to a certain level. And then that's hopefully where the pullback phase ends and we will start to head lower, okay? Now, it employs these 2 simple indicators, and it's their relationship to the price that automatically produces signals. So this is what it is. We have 2 indicators. I've just given you one, and their relationship to price is what will produce and generate a signal. Now, in an overall uptrend, as we just said, buy signals will be generated during a decline. And in an overall downtrend, sell signals will be generated during a rally. Okay? So this is the basic format of what we're looking for in strategy number 9. I know we have some other pullback methods as well, but we also have some pattern recognition strategies that look for continuation trades, that look for a rally. We look for a little stop or pause for 1 or 2 bars before we get back in. Okay, that's totally different from a pullback. A pullback, you're looking for some type of a sell-off to buy, or you're looking for some type of a rally to sell. All right, so that's the basic format of this. Let's look at some current down market examples because we know we've been in a down market. So let me just share with you some of the setups that you could have taken advantage of had we introduced this pre-launch of strategy number 9 a month ago, okay? All right, here's an example in Costco, COST. once again, someone looking at this at the from November coming in December would say, well, Steve, the chat room, we talked about Costco a lot, and we're all staying out of this because look at this stock. It's going sideways. We're in a range. There's absolutely nothing to do here. The earnings really didn't predict anything. And there's really no indication from the institutions of what they're doing. So I'm kind of staying out of this. Do you realize how every justification I made for not trading this is based on what someone or something else is telling you what to do? Either the institutions, some convoluted indicator, some guy in a chat room. But you're not listening to the market, which is what we've never been trained to do. We're always trained to listen to some guru, some guy in a chat room. We're never trained to listen to the market. Someone would say, well, what do you mean listen to the market? How do we know what the market is telling us? Well, the first thing you would do on our platform is click on the buy-sell line, because the buy-sell line is simply the 50-period moving average, and it tells you whether you should be a buyer or a seller. So once you do that, we see the 50-period moving average is right here. Now, the majority price is below, but it's still traveling above, and then it comes back below. Here's the beauty of this method. It's so fine-tuned with the other tool and with the setup that it actually generated a sell signal right here. This was on the 12th of December, just a few weeks ago, okay? Now, knowing that, you have a number of choices on how to trade this. You have another number of markets. You could have purchased puts. You could have actually had some type of spread with a downward bias. You could have sold short the stock. There's just a number of things to do. But either way, you should be looking at this from a seller's bias. And that would have been a great idea because the stock fell 37 points coming into this past week, okay? Now, we had no idea the market was going to be this negative. Someone looking at the stock would say there was no indication it was going to go downward that bad. It was basically going sideways. But 37 points in just 3 to 6 days or 7 days is not a bad trade. How about Facebook? Now, we all know Facebook has been in an overall downtrend. We don't need the 50-period moving average to tell us that. When it had that bad news or that sharp gap down in the middle of summer, it has not bounced at all. Now, if you've lost money trading Facebook, it's because you've done what 99.9% of most traders do. They try to pick bottoms or pick tops. So every time you would have picked a bottom here, let's say you picked a bottom here, you would have had a little luck for a couple of days and thought, well, this is it, and then look what happens. And then maybe if you purchase some more down here, it starts to go up higher, so you figure, well, if it comes back here, I'll break even, and it goes lower and lower and lower. What about if we just sold in sync with the market instead of trying to fight it and trying to beat it, okay? The easiest way to find out is to apply the 50-period moving average. And we know we've been below it for a long time. Our rule with our methods is if price is above the 50, we're only going to be a buyer. But if price is below the way Facebook has currently been, we are only going to be a seller. Sure, you may have had some nice quick trades here if you bought here and got out the next day, or if you bought here and got out a couple of weeks later. But that's very difficult. Why swim upstream? Why try to make trading difficult when it's a lot easier if you just go with the flow, if you swim with the current at your back? So if the current is currently going downward, we want to be a seller. And according to strategy number 9, we are looking to sell on these bounces, okay? Each and every one of these bounces is a pullback. You see, that's a pullback to the downside because the bounces don't last. Now let me show you some real world setups that were generated using our new strategy number 9. There was a sell signal right there. That was in August. Another one generated at the top at the end of August, beginning of September. We started to go lower. We bounced again, and another one at the end of September coming into October. We went lower. On this bounce, we had another sell signal generated in the middle of October. We had lower, and then coming into the beginning of November, another sell signal. Followed lower. And someone said, well, this is the bottom. This is where we have to buy. Well, not really, because it was a sell signal. Lasted a couple of days, and this is what we mean by consistency. If you wanted to be one of those traders where you took your profits quickly, well, this would have been a nice trade for you. If you're the type that most likely wanted to stay in for a nice downward move like this, you most likely would have lost, or if you used our different money management techniques, would have at least broken even. But this is what we mean by consistency. Just because one trade doesn't work perfectly like the last one, it's a numbers game. Consistency means there will be small losses, there will be losses from time to time, but you want a method that's consistent enough to make it back. So look what happened 2 weeks later, another sell signal, which was just a week or so ago, and then look what happened later on. Now, if you had taken this very first setup here in August and just held on to it because, once again, you're in charge of your trading. We're not telling you how long to stay in and how long to get out. This is not a system. This is just a high probability point of entry. And then we give you different ways to exit if you like. You can exit with a 1-point gain. You can exit with a 100-point gain. It's up to you. But had you stayed in and continue to stay in, you have roughly about 50 or 60 points in your favor just coming from August into this last week. Just in 5 months, actually. Here's another example in NOC, okay? Another way in which most traders trade. They say, well, Steve, I go to this chat room. We follow the support and resistance, and we like to follow what the institutions are doing. In fact, I took this $10,000 class that mirrors what the institutions do because they're always right, and they're really big buyers. They picked this bottom right here, and look at the stocks going up. So I'm a buyer of this. I'm buying more. I've got the calls, and I'm actually going to buy the stock as well because these guys are never wrong, right? I mean, you traded on the floor. The institutions are the big money guys, so they know what they're doing, okay? Okay, once again, was any decision based off what the market was telling you? It's based off what someone else is doing. What is the market telling us? Well, on our platform, you simply click on the buy-sell line, and where is price in relation to that? Price is below. So if price is below, are you going to be a buyer? I don't care what anyone says. I don't care if some guy's been, making money on every trade for the past year. You will have a greater chance for consistency if you trade in sync with the buy-sell line. So where everyone else is buying, where all the institutions are buying, you're using strategy number 9. And strategy number 9 is looking for a setup to sell on this pullback to the upside. And guess what? On December 12th, a sell signal was generated. You could have purchased puts, had some type of strategy, or if you had a large enough account, we realize this is a very expensive stock, but maybe shorted an odd lot. But that either one of those decisions would have been the right thing to do because coming into this past week, it dropped 42 points. Okay? This is what we mean. When you're in sync with the overall trend and you're looking for these pullbacks, you have a really nice higher level of consistency than simply trying to pick tops and bottoms. Now, we looked at the S&P 500 as generated on our platform here. Remember, the market was going up, and then the market headed lower. As we said earlier, most people are geniuses when the market's going up. Everyone's making money, from some guy in a webinar to your brother-in-law down the street. Everyone knows how to make money. But when the environment changes, when the conditions change, that's where everything goes out the window. It doesn't matter if you're trading 50 years or 50 days. Most people have a very difficult time. I was reading an article this morning prior to this presentation about how all the hedge funds are doing terrible. One hedge fund was up around 15% coming into September, and now at the end of the year, they're actually down on the year. It's because these so-called experts don't know how to trade or how to invest when the conditions change. But let me show you the setups that were generated using strategy number 9. Now, this is just if you want to use this as a market timing tool. As we see here, it doesn't take a rocket scientist to tell you, well, all we had to do was follow the 50-period moving average because price is above. So we knew that we were going to be a buyer here. And strategy 9 was looking for setups in these sell-offs, okay? There was one generated here. There was another one generated here. So you could have had some nice trades. But then once we went below, now we look for these bounces to go short, okay? And look at the nice one here and the nice one here. Even though this was a little bit more aggressive because it traded above, it gives you the option because we are intersecting the 50-period moving average. All right, these were buy setups. Let's look at some up market examples because I just don't want you to think that it works in a down market, because if we did reach some type of short-term bottom, well, the market's going to go up for the next 3 to 6 months, presumably. And you want to be able to trade it on the upside as well, right? So let's look at some examples. Here's one in PG that was in November coming into December. A lot of people who were negative, who thought the market was going to go lower, may have thought that this was a top. But if we apply the 50, we ask ourselves, where is price in relation to that? Price is above. So we're not going to short it. We're going to look for a buy opportunity. This is not a sell-off where we're going to, make a topping formation until we go below. So we're looking for a buy here, and strategy number 9 generated a buy here at the end of November and a quick 5 points in the next 2 or 3 weeks, okay? Not a lot because the market has been weak, but still, while some other stocks were getting killed in November and December, this headed higher. Let's look at Yelp, okay? Once again, someone would say, well, Steve, I think this support is going to be broken. This is September, and that's a terrible month, and the markets look terrible. Interest rates, it look like they're going higher. The institutions I follow are big sellers, so I'm waiting for this to be broken, and I'm going to sell. Well, we apply the 50, and I don't understand why you would look at that as support. There's no such thing as support. You know, one trader's buy support is another trader's sell support. It's just too subjective. Trust me, I was trading support and resistance 40 years ago. It didn't work for me then. So why do you think it's going to work now? Why not just listen to the market instead of trying to figure out these support and resistance levels? The market is telling you it wants to go higher because it's above the 50. This is something you can start using this afternoon. Okay, go back and research it. Now, when we had these sell-offs, these were not points of support. These were actually pullback entries. You could have taken a quick exit and gotten out, or if you stayed in long enough, you had a chance to purchase some more. But either way, they were both great decisions because the stock went up 8 months coming into the end of September. Now, lastly, we look at Apple here. This was Apple coming into October. A lot of people were really negative on the market at that point, but we said, well, you know, the market may be heading lower, but until we close consistently below the 50, we are buyers in Apple. Now, remember, this is just a tool to tell you whether you should have a buyer's bias or a seller's bias. It doesn't say, well, price is above the 50, I guess I just keep blindly buying. No, you need structure. And what we're talking about today is structure in the form of strategy number 9, our new method, because they would, just off the 2 simple rules where we have in this method, a buy signal was generated right here in the beginning, or I should say the middle to end of September. And the stock went up 15 points coming into October. Okay? Now, a lot of people trade different time frames. We know not everyone trades daily bars. Let's look at a weekly chart of Netflix. Okay, Netflix going back 2 years, back to April 2017 and prior to that, actually. Now, we all know that at this point, Netflix was steadily headed higher, not tremendously, but we all know what happened later on. It took off tremendously into the $400 range, okay? Now, people say, well, gosh, you know, how would I have known that this was going to go higher? Well, no one knows it's going to go that high. Remember, we're not a predictive company. We never predict how high or how low something will go. We never predict when a market will top out or bottom out. We just want to listen to the market and find out what it's doing and then jump on board. So as early as, April 2017, we knew that we should have been buyers because the market was telling us it wants to go higher. We don't know how high, but it's telling us until we go below the 50, you should be a buyer in this. All right. Now, this is a weekly chart. If you wanted to invest off of weekly bars, there was a buy signal generated in July 2017 using strategy number 9, the exact same rules, and another one in December 2017, roughly a year ago. And had you taken the first one, that would have given you the capability to roughly capture 270 points before the stock started to roll over. So once again, how you exit, how you decide to enter, where to place your stop is entirely up to you. But the good news is we give you different variables for you to make a choice from. You don't just have to go in blindly. Here's an example in Snapchat. Now, we all know a year or so ago, Snapchat was a darling of the IPOs. I believe it came public around $25, $27. Everyone jumped in thinking it's going to be the next Facebook, and it really underperformed. In fact, it didn't do well at all. Now, a lot of people, once they're in a bad position, don't know how to get out. They're figuring like, either I'm going to stay in this for the long haul and just turn this into a long-term investment, or I'm looking for a place to get out. I just don't know how. Strategy number 9 could actually help you that way, okay? We apply the 50-period moving average, and once we had consecutive closes below, as we did here in April of this past year, we went lower, and here's a nice bounce, all right? Now, a lot of people would say, well, you know what? The institutions came in. They have some really nice support here. It looks like we really bottomed out. That's a really strong support level. It's a Fibonacci level. And so, you know what? I'm going to stay in this position. Where is price in relation to the 50? As long as price is below, you should not look at that from a buyer's bias. Look at it to sell. And strategy number 9 generated a sell signal right here. So you could have saved yourself an extra 8 points by exiting your already losing position. Now we can look at a monthly chart. If you're the type of a long-term investor that likes to maybe purchase these leaps or likes to purchase options or even likes to short stock, if you have a large enough account, well, look at this example in DVN. Once again, someone would say, well, we're just in a range, Steve. Nothing really to do here. We come down, we come up. It's just kind of in a range. Well, now, not really. It's in a downward trend. It's not in a range. It's in a downward trend. The overall market is negative. So you want to use those bounces to sell. Now, these are monthly charts. Nothing changes because we're looking at a monthly chart. We have a sell signal generated here. In about 5 months, you could have captured 15 points. Another sell signal generated here. You could have captured a quick 10 points. And then on this bounce, another sell signal generated here for a quick 20 points coming into December of this year. Lastly, we know a lot of you are intraday traders. This was, I believe, Thursday of this past week, okay, when the market went up on that, I believe it went up 1,000 points. Now, this is a Pacific time. At roughly around 7, 8 o'clock, we had a nice rally, and then we started to sell off. A lot of people were saying, well, that's it. This rally's over. Time to get out. We're going to make new lows. The market's terrible. There's still no political decisions made. There's a lot of bad news, so we got to get out. Well, what's the first thing we do? We apply the 50-period moving average. And so what's the market telling us? Until we have consecutive closes, anywhere from 3 to 5 closes below that, we're only looking at the spiders from a buyer's point of view. Even on a 5-minute chart, nothing changes. So if we are above the 50-period moving average on a 5-minute chart, we're looking for a pullback to purchase at lower prices. And strategy number 9 generated a buy setup right here. Wouldn't you like to have purchased the spiders right there on a 5-minute chart? Now that generated 8 points on the spiders, which is a $230 stock. But think of how many points that was. That was hundreds of points in the Dow. So you could have used this as a market timing tool, maybe to purchase something else, maybe to buy some E-mini futures. It's up to you. But you've just seen examples in monthly stocks, weekly, futures, ETFs, and trust me, it works just as well in currency pairs, futures, as well as commodities as well. Okay, let's review before we go into question and answer. Let me tell you about a great offer we have for you to take advantage of this. Remember, strategy number 9 is a brand new strategy. I apologize because it's so simple. It only has 2 rules. I really can't divulge any more than what I've just done, because if I do, well then you know the whole strategy, and I can't do that. Trust me when I say it is a really, really consistent method. It can be applied to any market, any time frame, any direction, and because it is so good at capturing these large pullbacks at times, you can apply options to this as well. But remember, paper trade, if you decide to become one of the first traders on our list to trade this, paper trade first, okay? We are in the pre-launch phase, and we want you to fully understand it if you decide to become a student of mine. So paper trade this first, because as I stated, even some other simple strategies I have, not as simple as this, it's the simplest one I've ever had, but other ones, traders will always fail to really absorb the rules, and they'll jump in too quickly and inevitably lose. And they say, how come I'm down already a couple of $1,000s? This stuff doesn't work. It's because we told you to paper trade so that you fully understood the process and understood how to implement the rules correctly. As you saw in a couple of examples, it's all about consistency, meaning that from time to time there will be losses. That is okay. Don't worry. I showed you a couple of examples where there were losses. That's okay. What we're looking for is something that is consistent enough to recoup those losses. And strategy number 9 does a very good job of doing that. Now, you owe it to yourself to start out 2019 in the right direction. I know most of you didn't have the type of year that you wanted. That's okay. That would probably be the majority of all traders. That's okay. You have a great chance now to correct that, to start out in the right direction. This is what you owe yourself, because we know how hard you work. We know how hard you study, and we know how much money you've put into this by buying these programs or systems or these classes that don't work. It's time to invest in yourself. Remember, we're going to pinpoint where these high probability setups are, but you're going to make the decision how to enter, how to exit, how to trade it with options, with stocks, with futures. It's up to you. I take no part in that. And that's why I'm doing that, because I want you to be successful. If I were simply here every day saying, buy these, sell these, don't worry about it, that would be contributing to your losses, in my opinion. That would be taking you out of the game. And what kind of a teacher would I be? I want you to be trading not just for a good month or two. I want you to be trading 30, 40 years down the road. So why don't you invest in yourself? You owe it to yourself to start out the new year fresh. All right, here's a great offer we have for all the people attending today on this Saturday webinar. We're going to offer you strategy number 9 along with our platform. This is the PTS Primo charting platform where you saw all the charts generated today using our buy-sell line. We're going to give you 1 year of our platform along with the strategy. This comes with detailed video course instruction, all the different exit, entry, and stop placement variables, the entire course rules. This also includes strategy add-ons. We know we have a lot of traders who are already very happy using TradeStation or Metastock or MT4 or NinjaTrader. That's okay. We will have add-ons for you to apply to those as well. But in our opinion, the simplest, easiest way to trade this is with our platform, which you're going to get as well. You're going to get all the automatic setups there, and you won't have to worry about uploading something on your current platform. This also includes the scanner with the platform. So, some nights when the markets are really kicking in, as you saw, with the market on a couple of weeks ago when we had that nice little bounce, there were tons of strategy number 3 sell signals. And in this past week, boy, you could have really reaped in some nice gains with those setups. Now, we are bouncing again. We've just started to get some more new signals as of late. In fact, I saw one last night, I can't tell you about it because I may be giving away, but one last night in the close in an indice that may be generating a sell signal. All right, so these are really, really nice setups that can be scanned, so you don't have to look through dozens, if not hundreds of stocks on a nightly basis. And lastly, you're going to get continuing educational correspondence. I'll be your mentor for as long as you want. This is not a 2-week course, and then we say, see you later, good luck with that. You can always email me. Email correspondence, and I'll get back to you answering questions if you're having trouble or if you don't understand a particular issue. Now, this is our super end of year special. If you purchase these normally and separately, it would cost you over $4,700. Don't worry, we're not going to charge you that. We're not even going to come close to having an offer like that. We want to discount the price roughly about 60%. For the early sign-up for the pre-launch, we're only going to take a limited number of students to trade this along with me. It's $19.95. You're going to save over $2,700. That's nearly 60% off. But here's another advantage to this. If $19.95 is still difficult for you to come up with right now, we have payment plans. So if you contact Pro Trader Strategies, who handle all of the tech support with the platform and all the add-ons and all of the discounts, they can work with you. For a small deposit, you can still be up and running and have a payment plan, and you can still be one of the first few to start trading strategy number 9 along with me. So this is a great, great offer. Would normally cost you close to $4,700. We're discounting that roughly about 60%. You're saving $2,700. And if you want to have a payment plan, we'll discount it even more. But that you have to personally set that up with Pro Trader Strategies. So here's how to take advantage of this, because trust me, 2018 is over. What do we have? Just about 1 or 2 more days left in this, okay? I can almost guarantee that the majority of you out there are nowhere near where you wanted to be at the end of 2018. We all start out the year with all these hopes and dreams and where we want to be, and the majority of traders never reach those hopes and dreams. I know what that's like. When I first started trading, it was extremely depressing and frustrating because you put in a lot of hard work and studying and research, and also you spend a lot of money. I can't tell you how much money I spent when I first started trading, and this was 40 years ago. And then you have nothing to show for it. At the end of the year, you start to wonder if this is really the right thing for you. Well, trust me, a year from today, you will have wished you became a member of this course. You don't want to be where you are right now a year from now. You want to be looking back and saying, gosh, for the first time, I'm a consistent trader. Sure, I have some losses every once in a while, but I feel confident in what I trade that I'll be able to get back on board. I feel confident I'm making my own decisions, and for the first time, I feel like I'm really in charge of my own destiny. That's why we say a year from today, you will have wished you became a member of this course. Here's how to take advantage of this, okay? Contact Pro Trader Strategies. Remember, they handle all the tech support. They handle all the discount and pricing and all the different add-ons for different platforms. You can either email them. I personally would suggest calling them directly. They have trading consultants manning the phones right now. You can set up a payment plan or any questions regarding the add-ons with another platform that you may have. They'll be happy to answer them. You can call them directly at area code 310-598-6677. Now, as always, that link you see at the very bottom will take you to the sign-up page and more information on the course, but that's not a live link. You would have to copy and paste that. If you look in the chat box on the GoToWebinar column on the far right, they have posted a live link. So all you have to do is click that one in the chat box and it will automatically take you there, okay? I'm going to leave this information up. I promised you I would answer any questions, so if you have had questions, now's the time. Just go to your question and answer box and they will I will automatically answer them, but this information will stay up here, okay? Question, can I do strategy number 9 with TC2000? And if so, is there a lower cost since I wouldn't use the Primo chart? You know what, once again, Danny, that's a great question. I am almost certain that you can do it with TC2000, but I would once again contact them. There's no obligation. They're not going to get you to buy anything. They would answer your tech questions. Once again, anything with tech support or discounts, they can answer that for you. My job is strictly to teach and trade alongside with you to make sure that you understand strategy number 9. But in terms of tech support or add-ons or discounts, they would be happy to work for you, and I work with you as well. So there's no obligation. Feel free to contact them. Does this only indicate pullback but not indicate a change of trend? Well, first of all, a change of trend, there are different ways to determine the trend. There's the overall trend, and then there's this short-term trend. Now, the overall trend is determined in this method by using the 50-period moving average, okay? And also there is another aggressive way, which is in the course, which I can't tell you right now once again. But you can find those things out for the overall trend. Now, the short-term trend is usually generated by using shorter-term indicators or shorter-term tools. Now, I know a lot of you have gone to my webinars in the past. The best short-term trending tool I know of is the PET-D. Okay, that's another tool I was introduced to on the floor some 4 decades ago. The PET-D, from what I've been paper trading myself for 3 or 4 months now, doesn't really apply too much to strategy number 9. Okay, so there's no real need for it. We see it this time. So in terms of short term, there's no real need for looking at anything short term right now other than the overall trend. Okay, so when you say, does this only indicate a pullback but not indicate a change of trend? The change of trend that you're looking for is the overall trend. That's what you're looking for. All right, we're not looking for a change of trend in whether something has bottomed out or is starting to go. That's not what this does. This looks for the overall trend, and then we look for a bounce if the overall trend is down, or we look for a sell-off if the overall trend is up. Okay, it's that simple. We don't want to overcomplicate it. It's a good question, but we don't need to overcomplicate it at this point. Another question. I have NinjaTrader. Can I apply it to that? Yes, you can. And once again, we have the add-ons. You will have the add-ons. We are putting this all together. Remember, we're in pre-launch. Nobody has traded this. This is not out in the market yet. Once we do, and once we see the success, the price will probably not stay where it is discounted. We will go much higher because this is our end-of-year pre-launch. You're going to be the very first few to trade this, and we're keeping it to a small number. We're not going to have everyone in the world be trading this. We made that mistake with the PET-D before, and then some people tried to auto-engineer it and reverse it, and some people tried to sell it on the internet. We want to keep it small because we feel so confident about this, okay? And also the price will most likely go up next year. So you can get in, be one of the very first few with a payment plan. This is a great way to come in with a payment plan. You don't have to come up with $19.95 if you don't have it. That can still be a student of mine and trading strategy number 9 as our pre-launch phase. And a NinjaTrader, it can be. We will have the add-on for NinjaTrader, but once again, we feel that the simplest and easiest way to apply any of our methods and techniques is by using our platform. That's why we devised it. We devised it so that everything is one click away. So you wouldn't have to go into an edit box. You wouldn't have to upload it. It's just right there already pre-formatted. All the tools, the indicators, all the sections are pre-formatted and they're right there for you. So we can't think of anything easier to use than our platform, okay? And another thing, people are asking, is there something else on our platform? Yes, we have a number of other studies. We have a number of other indicators to tell you the short term as well as overall trend. 4 different ways to find out what the overall trend is with the buy-sell line. We have our scanner, which scans any time frame, any market, any direct. We give you a list anywhere from the S&P, the NASDAQ, commodities, currency pairs, futures, so you can scan for strategy number 9, or we show you how to make up your own basket of stocks or market. If you're interested in trading a basket of stocks, we show you how to do that. You can scan for that as well. It's really simple, plus we have testimonials of the great tech support we have. So this is a really, really great offer. I can't think of a better way to start out 2019 than in the right direction. We'll be trading right alongside each other with this format. So please take advantage of this. Even if you want more information about, as someone was asking earlier, about a different platform like TC2000 or a discount, there's no obligation. Contact Pro Trader Strategies. They would be more than happy to answer questions. There's absolutely no obligation. But remember, this is going to be for a limited time only, this pre-launch, okay? So there's the information you need. Once again, my suggestion would be to call 310-598-6677. As we conclude today, I just want to say thank you so much for taking time out of your Saturday to join us. I want to wish you all a very happy new year, a safe new year, and I want to wish you a prosperous 2019. And I can't think of a better way to do that than by offering you something that I've been back testing and trading and paper trading for 6 months and then trading on my own for the past 3. Hopefully, you'll be able to come along with me with this great offer, okay? Thank you so much. Have a great new year. See you in 2019. And thank you so much. As you take one last look at our disclaimer, I wish you the best of luck and look forward to all of you becoming students of mine in the Strategy Number 9 course. Bye-bye. I'll see you next year.